Why does Bitcoin have any value? And I would start with some of the sagest words from my favorite investors. If you want to know what your father sends you when you leave ETFs to join a crypto startup, this is what he sends you. Bitcoin is rat poison squared. Warren Buffett didn't like Bitcoin because it doesn't have cash flow. This trips people up. How does Bitcoin have value when it doesn't have cash flow? And I have a simple way of thinking about it, which is to think of Bitcoin as providing a service. The service Bitcoin provides is the ability to store wealth in a digital format without relying on a bank. And there are evidently 50 people in this room that want that service. There are 100 million people around the world that want that service. When you think of it as a service, its value doesn't seem so unusual.
If Bitcoin has no cash flow, how can it have value? The answer is straightforward. Bitcoin isn't a company. It doesn't generate revenue, pay dividends, or earn yield. That's because it's not meant to. Its value isn't derived from profit. It's derived from utility. Bitcoin offers something unique, the ability to store and transfer wealth without banks, governments, or third-party permission. It's decentralized, scarce, secure, and immune to inflationary policies. In that role, it's more like a monetary network than a traditional investment vehicle. At the Money Show Masters Symposium, Bitwise CIO Matt Hougan addressed this exact misconception. Critics often misjudge Bitcoin by comparing it to stocks or bonds. But Bitcoin isn't trying to replace equities, it's offering a digital alternative to fiat currency in gold, and it's working. Over 100 million people worldwide already use Bitcoin for this purpose. With rising demand and a fixed supply, Bitcoin's value proposition only gets stronger. Hougan believes the structural dynamic, combined with increasing adoption, makes Bitcoin a foundational financial asset with long-term upside. And before that, be the one who says I was here before 100K. I'm on a mission to hit 100K subscriber before 2025 ends. Help me get there. Subscribe now and drop your thoughts on the market in the comment. Let's win and grow together.
Why does Bitcoin have any value? But to know whether I'm walking into the lion's den, I want to see a show of hands. How many people think Bitcoin is great and own it and think it's going up in the future? Oh wow, we got a lot of hands. How many people think it's terrible and going to zero? The worst thing since sliced bread. We have one honest man in the room. That's beautiful. I thought I would start with this question because I get this question a lot. Why does Bitcoin have any value? And I would start with some of the sagest words from my favorite investors. If you want to know what your father sends you when you leave ETFs to join a crypto startup, this is what he sends you. Bitcoin is rat poison squared. Warren Buffett didn't like Bitcoin because it doesn't have cash flow. This trips people up. How does Bitcoin have value when it doesn't have cash flow? And I have a simple way of thinking about it, which is to think of Bitcoin as providing a service. The service Bitcoin provides is the ability to store wealth in a digital format without relying on a bank. And there are evidently 50 people in this room that want that service. There are 100 million people around the world that want that service. When you think of it as a service, its value doesn't seem so unusual. We're used to companies providing services. Microsoft provides a service, Microsoft Word, Microsoft Excel. When more people want to use Microsoft's service, people buy those software and the price of the stock goes up. Bitcoin provides a service, the ability to store wealth in a digital format without a bank. When more people want that service, guess what? The price of Bitcoin goes up. The only difference is there's a Microsoft company that you can pay a subscription fee to get Microsoft service. There's no Bitcoin company. You can't pay a subscription fee to Bitcoin to get the service. The only way you can get the service Bitcoin provides, which is storing wealth in a digital format without relying on a government or a bank, is buying Bitcoin. But it's really no different from any other service providing company. Now, usually when I say that, people point to charts like this and says, you know, Matt, this is a terrible way to store value. Look at all these downturns. Look at your gray hair. We're seeing 60%, 50%, 40%, 30%, 20%. But the secret of this chart is that's actually not a chart of Bitcoin. That's a chart of gold since the 1970s. We have this mythical idea that gold is not volatile, has never been volatile. The reality is gold protects your value over long periods of time. And it's done a great job of that for 5,000 years. But when we zero in on any specific moment in time, you get things like that 65% plus drawdown post-Reagan or the 45% plus drawdown post-2010. So we have this mythical conception. And when you look at Bitwise, at Bitcoin from this perspective, and you think about what's happened since COVID, the US dollar has lost about 29% of its value, and Bitcoin is 30x'd. I would say that that is a pretty good way of storing value. So at Bitwise, we actually think Bitcoin is better than gold. I'm not going to dwell too long on that because we only have 25 minutes. But I do want to focus on this question, which is, what should the price of Bitcoin be? How can you value Bitcoin? Because that's what you all want to know. I've worked in the crypto industry for 7 years. I wrote the CFA's Guide to Crypto. That's a credentialing institute in finance. And I will tell you that crypto analysts are absolutely terrible at valuing Bitcoin. They put up these ridiculous ideas. If you're a Bitcoiner, you may know of the stock to flow model. That is a theory in Bitcoin that the value of Bitcoin is related to how much new Bitcoin is produced. This would argue that the price of Bitcoin will go up forever. And I'm bullish, but I'm not that bullish. There's also this Metcalfe law argument that the price is a square of the number of participants. That would also argue it goes up forever. There's even this rainbow chart, which postulates that the price of Bitcoin bounces between purple and red, which is a terrible way to run your financial analysis. I saw over 7,000 ETFs launch. Bitcoin ETFs are the most successful ETF launch of all time, not by a little bit, but by a factor of 6. The second most successful was the NASDAQ 100 Qs. They pulled in $6 billion in their first year. Bitcoin ETFs pulled in $36 billion. They've pulled in almost $7 billion so far this year. Last year, Bitcoin ETFs purchased 572,000 Bitcoin. Now it's Saturday, so we're all still waking up, but 572,000 Bitcoin is more than 164,000 Bitcoin. In other words, ETFs bought more than 100% of all the new supply. And what the history of ETFs tell us is that the amount of AUM in an ETF tends to grow over time. The first year is usually the weakest year. This is a chart of the AUM in gold ETFs since they launched in 2004. And you can see that gold ETFs had a good first year. They attracted $3 billion in assets, but they did more in year 2 and more in year 3 and more in year 4. We're here in Bitcoin ETF land. And I think we will see more inflows into Bitcoin ETFs this year than we did last year. In fact, our prediction is we'll see about $50 billion in inflows. The next thing is corporations. ETFs aren't the only thing buying a lot of Bitcoin. Firms like MicroStrategy, Marathon, Tesla, Coinbase, Block, etc., are also buying a lot of Bitcoin. MicroStrategy, or Strategy as it's called today, gets the headlines, but there are actually over 90 publicly traded companies that own Bitcoin on their balance sheet today. And how much Bitcoin? Well, let me fast forward here. This is the amount of Bitcoin they hold. They bought 320,000 Bitcoin last year in 2024, which is an incredible amount. Again, 320,000 Bitcoin is more than 164,000 Bitcoin. So again, we have ETFs buying more than 100% of the supply. We have publicly traded companies buying more than 100% of the new supply. It's a supply and demand game. In fact, so far this year, just through today, publicly traded companies have bought 180,000 Bitcoin. Again, they've bought more than 100% of all the new supply. The third source is really governments. People don't think about this, but they're over, actually it's a dozen governments that own Bitcoin today, including the US. As a US citizen, you have a share in the US Strategic Bitcoin Reserve, which was created a few months ago. Every American owns $47 of Bitcoin since the ETFs launched in January 2024. And I think it tells you everything you need to know about what's happening in this market. I just made the case that there is a structural mismatch between the demand and supply. New sources of demand are buying more than 100% of the supply. And what that means is existing people who already own Bitcoin have to sell it. And they're only willing to sell it at certain prices. So what have we seen? As soon as the ETF launched, the price ran up from 45K to 72K. And then it traded sideways for about 6 months. Why did it stop at 72K? Because 72K was the previous all-time high. And people are people, and there were people who were willing to sell at the previous all-time high. So remember, people have to sell because there is incessant demand from ETFs, corporations, and governments. So it hovered around 72K while people were willing to sell at that all-time high. And then it broke. And look what happened when it broke above 72K. It ran straight to 100.
Bitcoin's price is driven by one of the most powerful forces in economics: fixed supply meeting rising demand. Only about 164,000 new Bitcoins will be mined this year, a number hard-coded into the protocol, and impossible to inflate. Meanwhile, demand is accelerating from all angles. Major ETFs are absorbing supply. Corporations are steadily building positions, and even nation-states are beginning to accumulate. When more buyers chase fewer coins, the result is simple: upward price pressure. This isn't hype, it's math. As long as demand continues to grow and supply remains capped, Bitcoin's price dynamics will remain fundamentally bullish. We're not just witnessing a rally, we're watching a new phase of monetization unfold, and the underlying numbers make it clear this trend is just getting started.
Why did it run to 100 and then stop there? Why is it $103,000 today? Because people are people, and $100,000 is a nice round number, and there are people who are willing to sell at $100,000. When we look underneath the surface and we look at the source of that selling, there are two sources. One is retail investors who have been willing to sell at $100,000 because it's a nice round number, and the second is a few estates, Mt. Gox and FTX, which released about 100,000 Bitcoin, and that now no longer exists. My thesis, and I could be wrong, is that as long as we have this incessant demand from ETFs, companies, and governments that are buying more than 100% of the supply, we will eventually exhaust the people who are willing to sell at $100,000. And when we do, I would ask you where it stops. I don't know where it stops. Our prediction at Bitwise is it ends the year at 200,000. That could be wrong, but 200,000 is the next nice round number. And I do think Bitcoin really is as simple as this. The setup was I told you how Bitcoin has been de-risked, but I really felt that supply-demand story was worth noting. Everyone missed Bitcoin. You shouldn't feel bad. The first time I heard about Bitcoin, I was running ETF.com. I had 8 young CFA analysts between the age of 22 and 27 years old. We had a weekly meeting on the hottest topic, and our analysts could present whatever they wanted to. Each analyst took a turn each week. In February of 2011, Bitcoin crossed $1 for the first time. It was called Dollar Parity Day. And my team led an hour-long session on what Bitcoin was. And the person who led that session now lives in a very nice house in Santa Barbara. I left that room and didn't buy any Bitcoin because I had to get on with my day. And it's easy to beat yourself up for doing that. But the reality was, in February 2011, there was a huge number of risks in the Bitcoin market. There was technical risks. This was a new technology. We didn't know if it would work. There were trading risks. Literally, the largest exchange at the time was a PayPal address that you would send money to, and they would send you Bitcoin in 48 hours. I looked at the terms of service for that. You can find it on the internet. It's called New Liberty Standard. It says this may be legal as far as I know. The largest custodian in the world was Mt. Gox, which collapsed a few years later. The government didn't like it. Regulators didn't like it. There were a huge number of risks. The reality is that Bitcoin has changed today, right? Bitcoin today is custodied at firms like Fidelity. Charles Schwab is turning on Bitcoin exposure. The US government has Bitcoin exposure. 9 of the 10 largest hedge funds in the world own Bitcoin. Emory University owns Bitcoin. MIT owns Bitcoin. Stan Druckenmiller owns Bitcoin. Ray Dalio owns Bitcoin. BlackRock has a $70 billion Bitcoin business. Bitcoin has been substantially de-risked. And you don't have to feel bad that you missed it back when it was $1. Everyone did, and they did because there were real risks in the market. But a lot of that has been de-risked. We just mentioned you can buy catastrophe bonds in an ETF. You can buy Bitcoin in one of 10 ETFs. Of course, mine is the best. But you can buy it in one of 10 high-quality ETFs. It's been substantially de-risked. But there is this structural mismatch between supply and demand. When you look at Bitcoin and you wonder what the price is doing, don't pay attention to all the Bitcoin talking heads. Just remember it's supply and demand, and we know the supply. There's 17,000 cryptocurrencies in the world, which sounds ridiculous and is ridiculous. But I want you to not think of them as cryptocurrencies. I want you to think of them as crypto assets or even software companies. The reality is that every crypto asset is two things. There's Bitcoin, the asset, on Bitcoin, the blockchain. There's Ethereum, which is the second largest crypto asset, on Ethereum, the blockchain. And the blockchains are just pieces of software. And you can make a piece of software good at different things, right? Microsoft Word is a piece of software, and Salesforce is a piece of software, and Zoom is a piece of software. They all do different things. And the same is true as crypto. So Bitcoin, as a piece of software, what it's designed to be good at is storing wealth. That means it's a very conservative piece of software. It almost never upgrades, because if you upgrade, you introduce new risk. It's a very decentralized piece of software. It's operated by hundreds of thousands of people. It changes very slow. All it's good at is storing wealth. In fact, it's a limited piece of software. You can only send Bitcoin, receive Bitcoin, hold Bitcoin, destroy Bitcoin. It's like a calculator. Ethereum was developed after Bitcoin, and it looked at Bitcoin and said, it's amazing. You can store wealth without a bank. You can move money at the speed of light. What if we could program your money to act like the New York Stock Exchange, or program your money to act like a lending agent at a bank, or program your money to act like the Visa network? And so the Ethereum programming language is way more complex than Bitcoin. And it updates all the time. It does like 2 major upgrades a year at this point. I raise all that to say, it's never going to be as good at Bitcoin at being digital gold, because it's not as good at storing wealth. But there's this whole other world of crypto, of things you can do on a blockchain that it's way better than Bitcoin at. So what we're seeing is firms like BlackRock are issuing money market funds, not on Bitcoin because they can't, but on Ethereum. What we're seeing is stocks and dollar payments. All of that is moving into Ethereum. I raise all that to say they do different things. I suspect in the future, Bitcoin will be like digital gold, a way to store wealth. And Ethereum will be sort of the foundation of a new internet.
Bitcoin isn't the same speculative gamble it was in 2011. Back then, uncertainty around shady exchanges, weak security, and unclear regulations kept most serious investors on the sidelines, including Matt Hougan. But that world has changed today. Bitcoin is held in institutional-grade custody. It sits on the balance sheets of corporations and even the U.S. government. 9 of the top 10 hedge funds, including BlackRock and Ray Dalio's firm, now have exposure. You can access it through mainstream investment platforms or self-custody. With military-grade security. As Hougan puts it, Bitcoin has been de-risked. The old objections no longer apply. Its supply remains permanently fixed. And with rising demand from institutions, corporations, and governments, that imbalance between supply and demand is becoming increasingly powerful. Skeptics aren't just wrong, they're standing on the sidelines of one of the most important financial shifts in a generation. War markets, Bitcoin. Click for the next phase.